Hello, guys, and welcome to the Almus YouTube channel. This is our weekly windup series, and I'm your host Swaraj. And I have JK with me to take you through the week that has gone by. And we are also meeting after a long 2 weeks, and a lot of activity has happened in these 2 weeks. It has been quite a volatile session for all asset classes. Uh, of course, on one hand, we have got increasing rate hike expectations, which has led to a record sell off in the treasury bonds. We had the results of the ECB meeting, which took place last week. We also had the Indian inflation numbers, and what a week for currencies, especially the Chinese Yuan and the Japanese Yen. Hi, JK, welcome. And my first question to you is on the IMF report that has come. Now, of course, global growth forecast for the year has been reduced. It has been done so even for India. While on one hand, we are seeing such kind of reports. On the other hand, major countries have been battling hard with inflation. Uh, JK, is all of this raising probabilities of a recession?
Hello, Swaraj. Yes, we have seen a huge sell-off in the treasuries and in fact bonds across the countries, including Europe and Asia, because the Fed has gotten more hawkish. Powell himself in one of the IMF discussion forum mentioned that a 0.5% rate hike in May is on the table, and market is actually looking at half each at two meetings to follow, and then followed by 0.25% in subsequent meetings. And the terminal rate is now being projected at 3.5% versus 3% projected earlier. So that is one part of it. Secondly, till March, the QE was in place. That means Fed was there as a buyer in the market, and that is over now. So there is no major buyer in the market. Investors are booking losses on their bond portfolio because they are incurring huge losses, and they are actually turning themselves into cash holdings now. Even that is seen even in equities also. So this is an atmosphere where there are little takers for bonds, and we have probably the quantitative tightening to follow. So this is the background under which we have to see this move up in yields. Of course, we will be very closely watching out for the PCE inflation number, which will come out in the coming week. Any moderation there may give some relief to this ongoing selling in the bonds. Otherwise, the trend is very much in place.
All right, JK, as you mentioned, a 0.5% rate hike is something which Powell is saying it is on the table for May. Now, 3.5% terminal rate is expected against the 3% earlier. Central banks are seeming more hawkish than before. As JK mentioned, it has led to a record sell-off in treasuries. JK, please also take our listeners through where we stand on the or currently on the rate hikes by the Fed. Because now there were also talks regarding a 0.7% hike. Is an increasing hawkish Fed the reason for this treasury bond sell-off?
See, 0.5% is now given because Powell himself mentioned it. I have just gone through some of the statements of a few Fed members who will be now going into a blackout period from next week ahead of the Fed meeting on May 2nd. So 0.75 is not on consideration from Fed. I think it is, I don't think they intend to give such a shock to the economy, but definitely 0.5 rate hike is on the cards. But even with this, I think economy is going to struggle going forward because it's not going to stop with 1.5 rate hike. It's going to be for more months. So all these are actually adding up to the bearishness on the bonds.
Right. And so my last question to you, of course, we have now covered what's going on with the Federal Reserve and the Treasury sell-off, which is happening. My last question to you is, of course, on the currency markets. We have been seeing Japanese yen testing the 130 mark. Dollar index has also been in a constant trend upward, testing 101. Chinese yuan also has depreciated significantly. Uh, what kind of moves are you expecting in the coming week for the currency market?
We have seen record moves in some of the currency pairs, like Japanese yen has weakened 10% in the last 1 month. And in the last 1 week, we have seen little over 1 week, I can say, Chinese yuan, which is a surprise mover, weakening by 2%, 2 to 2.5%. So this is setting the stage for dollar index to be really on a bullish path for much more time, because Japanese yen, though it is nearing 130 psychological mark, it's not certain whether they will do anything beyond verbal job owning. I think only if there is a you know policy change from Bank of Japan, like stopping the yield curve control or the bond buying program, or if they see any price pressures increasing in the economy due to the inflated imported prices. That is the only time we will probably see Bank of Japan talking about intervention or actually doing an intervention. Of course, we did have Japanese Finmen discussing with Janet Yellen on the sidelines of G7 meeting last week. That's one part. So Japanese yen is definitely the leading currency as far as this strength of the uh, dollar is concerned. Chinese yuan, again, multitude of factors in China. The economy is slowing, which we have been seeing for several quarters now. And although the latest number at 4.8 came higher than 4.4 projected, people are looking at the forward numbers, which are going to be much weaker, because China locked down a major part of their country due to the latest outbreak of COVID in their country. That's one thing. Then Chinese stock markets have been performing very poorly, and there's been huge outflow of money from Chinese financial markets, and that has led to this phenomenal weakness. I would say it's a normal weakness, 2.5% compared to, like, you are compared to euro, which has fallen about 8% in the last 1 year. But the time it has taken to move from 6.30 to 6.53 is very swift, and that's something which may be concerning the authorities. It is the same case like yen, where the 10% move happened in a very in a very short period. Yes, going forward, I think we are seeing overall strength in the dollar. What I see, coming up is a secular up move in the dollar. We used to see dollar strengthening against the low yielding currencies like euro, GBP, and yen so far, but that is now spreading into the emerging market currencies as well. So we can see some of the currencies like South African rand, or some Latin American currencies, even the Asian currencies are now slowly catching up on the dollar bullish side. So we have a prospect of dollar moving secularly higher against all the currencies until we get a sense where Fed is going to stop, and or we have a indication that inflation is moderating. Without any of this, we cannot see dollar topping out anytime nearby.
Right. And as you mentioned, JK, Asian currencies are also catching up to the dollar bull side. But one last question which I want to ask you. Of course, it seems right now that we cannot end our weekly wind up without talking about what's happening in the Russia-Ukraine situation. Of course, Russia has been continuing its takeover of Ukraine, and JK, any updates on that, and like what kind of implications are we seeing? Like, is oil going to sustain at these levels now?
I think it's something for which there is no easy answer. Early in the week, Russia mentioned that they are getting into the next stage of operation in Ukraine. So that actually, resulted in a burst of volatility in the markets. Europe, despite all the sanctions against Russia about oil, they are still dependent on oil and gas. They're still dependent on Russia. So that's continuing. I think the oil prices right now may be moderating a bit more because China demand side may be slowing down due to COVID lockdown. And if the rate hikes from the Fed and in general tightening financial conditions are starting to have an effect on commodity prices, because speculative positions cannot be held in highly high financing rates, and margins in the exchanges are also kept at higher level. So these lead to unwinding of speculative long positions in the commodities. We are also seeing the effect of that in oil. We have seen some effect of it in cotton, and then even steel prices are falling. I think this will catch up in the whole commodity space. Also, as we have seen a big fall in the other financial assets like stocks and bonds, maybe people will tend to lock their profit in the commodity positions also to make up for the losses that they have suffered elsewhere. So I am seeing the commodity markets are going to catch up on the dollar strength and see a sharp correction.
Right. So a more moderating commodity markets fall in the commodity prices catching up to the bullish dollar. Uh, Thank you so much, JK, for coming in and taking our listeners through whatever has happened in the week. Of course, I would like to end this session today, but before that, one of the highlights has been Elon Musk also putting an offer to acquire 100% of Twitter at $54 and 20 cents a share, which roughly comes to around $43 billion. Uh, of course, there was a series of tweets from him asking users which features they would like to be included, like an edit button for tweets. JK, any thoughts on that? Do you have any wishes for if Elon does acquire Twitter, any feature you would like you would like to see?
Unfortunately, I don't follow this market so closely. So yeah, I would keep my fingers crossed, because the technology stocks are the ones which are getting a big hit. Probably timing by Musk must be good, because he's uh, entering at a time when the stocks are getting beaten. And yeah, that's the only thing I can perceive from this.
Right. And guys, do comment below regarding what you think, what features should be added on Twitter. Consider like the wishes you have for the new features in Twitter. And that's it for this week. Thank you so much, JK. And I will see you all next week. Do check out our Market Morning series to hear more from JK and Pankaj and Shikhar, of course, our host. Thank you.